So Riaan, welcome to e-conference.
Great. So our kind of problem statement is to say that universities have two challenges. People don't want to be going to university to be better workers. They want to get a higher income. And that is increasingly a challenge for universities because they are not there to sell qualifications or the ability to create intellectual property, but really to give people a business to start. At the same time, in South Africa, the funding for universities is increasingly limited, and everybody wants to go to university, but the loans industry is booming. But at the same time, we can't really educate more people through a very limited education system in South Africa. What we then realized in our process is that we need cause-related platforms that transforms the capacity of participants in the economy to participate. And when I say cause-related, I mean leadership and entrepreneurship is two causes in our kind of context that's very, very important. We have a real market paradox in that we've got massive needs in our economy, but at the same time, massive unemployment. And traditionally, markets is very inefficient. The only way that we can start affecting these markets is by improving education, the financial depth, and also promoting international trade. And we took this perspective from the World Bank. So what do universities need to run an effective entrepreneurship intervention? That was a key part of our study. And we found that typically universities are driving an entrepreneurship value chain that includes opportunity marketplaces, which is roadshows, competitions, work readiness programs, community programs, startup seminars, entrepreneurship talks, etc. Then we found a lot of entrepreneurship short courses, um, sector programs, business model workshops, startup weekends. The education that the university does, we looked at that in terms of what types of qualifications, live streaming, conferences are being done, and what's the workplace experience that people have. And very key, the transition from a university ecosystem into a support ecosystem that allows for continued participation and commercialization. Also, a kind of key reference for us was looking at the MIT Martin Trust for Entrepreneurship. Just one second, my screen is moving too fast. Um, MIT between 2000 and 2006 started more than 5,800 companies, and the numbers have only been rising since. MIT's entrepreneurial impact is so great that according to a 2009 study, they the MIT alumni bring in revenue in companies that's worth as much as $2 trillion, which if it was a country, it would be the 11th largest economy in the world. And this they do through a very small facility. So this inspired us to start looking at how do we create a different way to educate entrepreneurship. We also know the story of the Startup Nation, in which in Israel, we see $6 billion being listed annually on US stock exchanges by Israeli startups. That is primarily an ecosystem. We do find that there is a perception that micro enterprises will stimulate the economy. We found that through research that innovation-driven enterprises stimulate the economy, and running a small business, while admirable, means little to an economy. And when we say in South Africa it's small business, it's literally a guy sitting on the side of the street selling sweets or other minor items. So we set a challenge in terms of the type of intervention that we wanted to design to create a business with a minimum turnover of 2 million Rand, which is about $150,000 per annum. We kind of also prove the case that if we don't do that, we don't create businesses that are large enough. So we did this as part of the company that I run, in which we set a goal to create 60,000 of these businesses in the next 10 years. Okay, so that's just the challenge that we put out. So I work very closely with universities to enable their ecosystems to do this. So if we each took a responsibility for building 1,000 businesses per annum, what would that look like? And that was kind of part of our study design. To do it, we identified that there's three kind of levels at which we need to create motivation for people, the personal motivation, the social motivation, and structural motivation. Um, and at the same time, you could be motivated to achieve something, but if you do not have the ability to act on that motivation, you become despondent. We also, in our study, mapped out the impact of 10,000 new businesses. What would it mean for our economy? And basically, if we can continue to create an entrepreneurship ecosystem and economy, we could add about 150 billion US dollars in our economy sustainably annually over the next 10 years. So we're really excited that we need to do things differently. So to achieve that kind of amazing impact, we had to analyze what's currently going wrong. A lot of the initiatives in universities currently are around micro-entrepreneurship stimulation, creating businesses that are too small to be sustainable and that are creating sub-economic employment. We've identified a phenomena that we're calling turning the tea lady into a tea company. Running a business is complex and not all the models are viable. So what happens in South Africa is we are breaking up larger companies into smaller companies in the spirit of encouraging entrepreneurship. And all that means is that we're creating new entrants into the economy that are not capable to adjust. Standalone development, everybody's trying something, but nobody has started working. So in my work, I've started combining a whole range of different role players in the economy and building a way for us to work together. Typically, we have a system where people, if they are interested in starting a business, could get a voucher to get a business plan written, etc. And we just find that the support system is absolutely lacking. And then once a business is actually started, we don't see through that those businesses actually succeed. So that is a real challenge. So we started asking a question of how do we create virtuous economic circles, and did a lot of analysis around different economies in the world in terms of just sizing different businesses and understanding that. So what we found is that in this world, we've got a lot of unconsolidated smaller players in major industries that need to be strapped together by a cycle of consolidation. Entrepreneurs with ideas and challenges need to execute, and there is lots of capital available, but a dearth of fundable businesses. At the same time, we've got a few large players in our overtraded economy, and the real opportunity for us is to stimulate small businesses and to start driving that. To do that, we needed a kind of predictable formula of how do you make an entrepreneur. Okay, so we need a predictable, repeatable process for creating entrepreneurs. We need a funding marketplace, outsource capabilities, and services to support entrepreneurs. And we kind of set out to do that. I came across this very lovely formula for entrepreneurship, which basically says it's your leadership abilities raised to the power of your purpose times your passion over your fear, multiplied by your revenue model, minus your cost structure, factored on your abilities to turn over your nest assets, multiplied by the attractiveness of your business model over your industry's competitors, looking at the external market's reality ignorance, multiplied by the sum over your operating years of your ability to formulate strategies in an effective and timely manner. So the question is, we are expecting entrepreneurs to take this very complex set of equation and to be able to execute on that from day one. We all know that starting a business is hard. How do we make it that? So we started looking at some interventions that work, and found that there are some entrepreneurship development processes out there that can work, and that we need to look at that. Okay, so so typically it's bringing people together. An entrepreneurship development process, and in this case, gives us 90 days to start a business. We need to define the target market. We then start running experiments in terms of servicing that target market. We give weekly feedback to peers. Every 3 weeks, a review meeting decides if you will go forward or not. And our overall objectives towards the end is to sell to our first customer, sell to the first 10 customers, adapt and review, and build a sales force. So that's the kind of core methodology that we found over time that works really, really well. From a needs assessment perspective, we started looking at what's the kind of skills that we need to teach people. And we found 3 very distinct phases, also based on the work of Olette, which is nucleation, product definition, and venture development. So those each are different phases in which a person needs different skills. So we started adapting our processes to a point where we understood that. So also we worked on an integrated model for venture success. So this gives us a quick diagnostic tool in terms of understanding what's the problem. If a company is not profitable, we need to look at their strategy, culture, and operations. If there's a delivery challenge, we need to look at if they understand their market, do they have a product, are they executing it well? And from a quality perspective, do they have the right people, the right process and technology? And we found that this diagnostic model allows us to engage with entrepreneurs quite constructively and allows us to pinpoint the issue in terms of helping them through their business. Entrepreneurship, yes, entrepreneurs are amazing people. They're more prone to heart failure, neurosis, burnout, stress, and related diseases, but they're also the happiest people when it comes to their jobs. Entrepreneurs work harder than any other class of employee. And starting a business typically triggered by a key life event at a critical time. We did find that entrepreneurship is a teachable skill. Capital is not a precondition for success. Innovation is invention times commercialization, not plus, like many people say. And entrepreneurship do not typically take risk, but often overestimate the probability of success. So interesting things that we found in our research. A lot of people say you should drop out, and that dropouts are better entrepreneurs. Research shows the research that we did shows that entrepreneurs are more often self-educated and not uneducated. And dropout status happens because people are focusing on getting what they want from classes, but not necessarily having to get the benefit from a specific curriculum. Education level is directly correlated with the size of business started. So we found that people that are more educated start bigger businesses. We also found that regional national product policy to stimulate entrepreneurship destroys jobs, but increases productivity and international competitiveness, which is not very good news for governments. New ideas, external stimulus is profoundly effective in creating businesses. Exposing people to external stimulus through education creates technology transfer. And the support structure that you're putting around yourself is the single most effective way to move a person from being unemployed to being an entrepreneur. The only academic correlation between who you are and what likely to become an entrepreneur is linked to the education level of your mother. And if you think about it, it's really about your support structure. It takes one person, startup or small business, an average of 4 years to sustainably employ 10 people. So a lot of people say that entrepreneurship is there for job creation, but ultimately the direct job creation potential of businesses are very slow. Okay. We also learned in this process that entrepreneurship education is easy to fake. Many students have gone through programs, but the basic assumption is that they are incompetent in these programs. Very few programs focus on linking the entrepreneur to the market. Few programs teach market targeting skills. The entrepreneurship tools in South Africa is outdated and linked to non-existent research. We had to start from scratch. Once we teach people to understand how to target and analyze markets, the opportunity they can see typically increase the turnover potential more than 100 times. And the access to market issues in their repertoire disappears. There's insane amounts of money going into entrepreneurship development in South Africa, but there's no proven outcomes. And we spoke to banks and they said that 95% of all business plans submitted to them are useless. They've not identified the customer or how to target them. After correcting this, 85% of all business plans are useful and likely fundable. So we developed a profile of the South African entrepreneur through our research, in which we, for the first time, created a statistically significant sample of the South African entrepreneur. We did that through a survey that was combined and analyzed. And interestingly, we found that more males than females are entrepreneur. We found the age is 26 to 36. Employment status, a lot of people are with entrepreneurial intent are currently full-time employees. So very practically, I need about a minute just to finish. we for the first time found out that there is a lot of our businesses have not developed their marketing materials, developed their products, or sold their products before, and that's the process that we help people through. A lot of people say they want to be entrepreneurs. Well, a lot of them actually don't want to be entrepreneurs because of the fact that they need to be entrepreneurs to survive.